You want to know what's going on with Tesla? This video is going to bring some answers to you. I'm also going to let you know some real talk opinions about Tesla, whether or not I'm buying the stock, where it could go next. We're going to look at some technicals as well. Negative headlines are everywhere. This one here talking about on the earnings call, Elon Musk says Chinese EV makers will pretty much demolish most competitors without trade barriers. Before we go on, I'd like to hear from you. What do you think about Tesla earnings? Are you buying the stock? What do you think happens next? So we know that the EV space competition's been heating up, and Elon Musk said Chinese electric car makers will find significant success outside of China. Tesla stock is up about 25% over the past year, but year to date, it's down 27%, trading right now at $181 a share. So again, the negative headlines are everywhere. This is on Seeking Alpha. EV Jolt, Tesla extends loss after 2024 outlook lacks details. And this is a good write-up because it's summarizing a bunch of analyst opinions on Tesla after earnings. So this first one, Tesla considering 3.5% revenue growth year over year, including a headwind of 15% from mix and price cuts that likely stayed negative. Now, GDP came in this morning and it was actually better than expected. Over 3%, expectation was 2%, and that's probably going to be revised down, but solid overall. So there's been talks about a recession for as long as you probably can remember, and that really hasn't seemed to be panning out very well for the bears. We're sitting at all-time highs. A lot of our favorite names like NVDA, AMD, Microsoft, Magnificent Seven names are doing well. Tesla is the exception. Now, why is that? We'll talk more about it later in the video. But again, I'd love to hear some comments from you. What do you think? Dan Ives from Wedbush Securities, he's kind of what you call a permabull, and he's not particularly impressed with the earnings call. And this is kind of the message you're going to see over and over if you do some research. And this is a quote from Dan. "We were dead wrong, expecting Musk and team to step up like adults in the room on the call and give a strategic and financial overview of the ongoing price cuts, margin structure, and fluctuating demand. Instead, we got a high-level Tesla long-term view with another train wreck conference call." Those are powerful words. Now, with that said, Ives still has an outperform on Tesla. He lowered the price target from $350 to $310. Well, the stock's trading around $180 right now, so that's significant upside. And you can see several different quotes here. Here's one from Morgan Stanley. This is focused on lower volume growth and essentially just not knowing where it's going to be. Right now, it doesn't look good in terms of the numbers in the short term. Now, of course, this is the push-pull dynamic with Tesla. Either you think it's a car company or you think it's a tech company. It's an AI company. It's a robotics company. So on the call, if you listen to it, lots of references to AI, FSD, even talked about Optimus, how it could end up being the company's biggest business. Of course, that's a moonshot, and Wall Street cares about right now, not 5 years, 10 years from now. And there are a bunch of articles and news headlines all across the internet that are generally pretty bearish today. You can see strong sell, sell, sell. Beth says hold. And this is a smaller contributor here, but he's talking about stock down 23%, now closer to 30% in 2024. NVIDIA is up 30%, Tesla is down 30%. That's a huge divergence there between those two companies. NVIDIA in the first 15 trading days of the year is giving you a 30% return, which is what the S&P 500 gives you on average in 3 full years. So you're going to see the same headlines over and over. Competition from Chinese automakers, even competition from other manufacturers, gross profit margins, valuation, and so on. Now, some of you might be surprised. Even Beth was overall pretty bearish on this article. She has that as a hold, but a lot of negative information in here. This first chart here talks about automotive gross margin excluding regulatory credits. You can see it topped Q1 at 30% and slumped to 16.33%. You can see it's a sharp dive downward. Looking at Tesla's automotive gross margin, you can see that's compressed dramatically as well. And part of the reason that Tesla, used to get a premium valuation, you look at some of the regular car manufacturers, and you might get 5 or 10% gross margin. You saw Tesla at 30%. And just for comparison, here's a chart showing Tesla, Honda, General Motors, Ford, and Volkswagen. You can see Tesla's the purple up here, and it was way above everybody else for a while. And it's kind of coming down to these same ranges. In fact, according to this, Honda actually has a higher margin than Tesla. Honda with about 8.5% and Tesla with about 7.5%, 1% less. And you got Ford down here less than 3% in the green. Now later I'm going to go through a chart and I'll tell you my opinion, what I see in the charts. Beth is talking about possibilities, upside $345 to $400, but it has to break above 264 and 280 to get there. And that's a long ways away, $100 from here. And she's saying here, if Tesla breaks below 203, then the target will be sub $100. So less than $100 a share. If you remember back in January 2023, just a year ago, this stock was right around that $100 range. But this is key right here, because at the end of the day, if you're a growth investor, you're paying a premium for a stock, you want to see growth. And Tesla now is expected to report single-digit year-over-year decline in fiscal Q1, almost zero growth in fiscal Q2. And that's compared to prior views for over 20% year-over-year growth. So this is significant. And the other main focus, of course, is going to be operating margins. So I'll talk more about that in a second. And I'm also going to give you some real talk commentary. I'm going to give it to you real of how I feel about Tesla stock and where it could go. So you can see the forward revenue growth here, Seeking Alpha 21%, but that's not the case. It's been revised. And so really these numbers aren't going to be accurate either. And so the forward PE gap of 62.04, this isn't going to be the case. Now, profitability wise, it does get an A+ here on Seeking Alpha. Gross profit margins though are under 20%. And remember this number because we're going to talk about it in a second. So I do think what we discussed earlier is certainly possible. It's not out of the realm of possibilities. And I remind the community all the time, we do chart day every single Wednesday, Patreon Discord. I tell the community pretty much every week, be careful. Be careful of just looking at technical analysis. The earnings and the macro are going to be most important. And so, of course, if Tesla blows out earnings and everything's positive, the stock's going to go higher and vice versa if earnings don't deliver. Now, it's interesting with algo trading, and this isn't always accurate, but I do like to look at these numbers. So if you look at how algorithms work, a lot of times they'll use lows, they'll use recent highs, and they'll do out an average. And basically, it'll take a stock right to that level. And that's what happened this morning. And you can see this low here, about $102. This goes back just to January 2023, just a year ago. And it ripped off of that number, pulled back, ripped up all the way to basically $300. Came down. And so the stock went from $100 to $300. It's been all over the place. 212 here, popped up to 270, then came down to, $193 here recently, then ripped up again. And now it's kind of fallen off a cliff with earnings. It started to sell off before earnings, and then it just dropped off a cliff this morning when the market opened. So this blue line here, if you follow this trend down, it's a negative trend line down, it would make sense to see it kind of come and touch this 175 level. If you take that $100 low and the recent high 265, divide that by 2, 182.50, that's really where it drove the price pretty much right away this morning. In fact, in Discord, I shared that I was going to buy it around $184, $185 because just looking at the chart, I thought that's where a possibility of where it could go. And I think it certainly can go lower. In fact, the bottom of this retracement is $150. And I shared with the team this morning, I wouldn't be surprised if you saw something like 150 or 160, but I do think, to Beth's point, that you could see under $100 a share as well. Now, this is really tough because if you're trying to buy the stock, do you buy it now? Do you wait? Dollar cost averaging does work. But let me share really what I think, some real talk. What do I think about Tesla? Am I buying more shares? Where's it going next? So first of all, I do own Tesla stock in both the main and the community portfolio, and I am bullish long term. But what about the short to midterm? One thing I'll say is that usually I like to invest in technology related companies that have higher margin profiles. So a lot of what I invest in is going to be cloud and semiconductor type companies, cybersecurity companies, and oftentimes with recurring revenues. So I really like companies that have higher margins, like software margins that are 80%, sometimes 90%. And I like to have that recurring revenue as well. Now, of course, with Tesla, there's certainly opportunities with FSD. And there are other opportunities where there could be recurring revenue built into the model. But at this point right now, that's not the case. And even though Tesla is an artificial intelligence company at heart, the focus of their business today is going to be electric vehicles. I made this analogy this morning in Discord, and I said it reminds me of SOFI. And not because of the margin profile, because in fact, SOFI's margin profile is really good. It's around 81%. Versus Tesla under 20% and even going down further than that. So generally speaking, I don't like to invest in companies that have, 15, 20% margin profile. But it does remind me of SOFI in the sense that we like to invest in a company like SOFI and say it's a fintech company, it's a fintech stock. But Wall Street doesn't really see it that way. Because of the fact that SOFI owns a brick and mortar bank, a lot of people, including a lot of Wall Street analysts, want to put it in the category of it's a bank stock. And so what does that mean? Well, it's not going to carry as high of a premium. And so this is the problem with Tesla as well. Wall Street wants to classify Tesla as a car company. And if you do classify it as a car company and you look at something like a ADP ratio, which is actually going even higher than that and getting worse, well, you can say it's crazy overvalued, it's too expensive, the story doesn't make sense to you. And either you love Elon Musk or you don't. He's very polarizing. So you're going to have mega bulls and mega bears. And this is really what we call a cult stock. So I invest in Tesla as a green energy, a green tech conglomerate, not just for electric vehicles, but for battery storage, and also the fact that at the heart, it's an artificial intelligence company, and they're doing a lot of exciting things that are more moonshot ideas later on. So both portfolios, Tesla, the cost basis is lower than what it's trading at now. With that said, we did nibble some Tesla in the community portfolio this morning at about $185. And I do think there's a good chance it can go lower. What's going to happen? Analysts are going to come out. They're going to start downgrading the stock. That's going to put more pressure. So it already has technical pressure from the technical analysis. You've got a lot of negative sentiment. You start getting analysts that are, downgrading the stock. Remember, Wall Street's focused on 6 months and 12 months, not 6 years and 12 years. So for me personally, I think it's a calculated risk reward as a long-term investment. But in the short to midterm, I think you will see some additional pressure. Drop me a comment below and let me know what you think about Tesla. And if videos like this are helpful, and if you're new to the channel, this is what we try to bring. We try to help you be a better investor. And generally, we're talking about exciting megatrends, secular growth trends, from semiconductors, artificial intelligence, cybersecurity, electric vehicles, and so on. Make sure you subscribe to the channel and click that bell for notifications. Appreciate you watching, guys. Have a great rest of your day. Take care.